Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, December the 22nd, 2016, a couple days before Christmas. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We create four main hypotheses in order to have a plan of action in place. Therefore, we don't have to think about what we're going to do when the market throws something at us. We have a plan ready to go. This is a subscription room, so if you're interested in checking out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. This is a group of retail traders that operate within a self-organized learning environment. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. I think I said that twice, but I said it so many times over the last couple of years, it just kind of goes. All right, so taking a look at the news. The news was kind of what I would say stagnant. We had Canadian CPI came out a little less than expected. Core retail sales was a good beat. Durable goods was a decent beat. GDP was, but the thing that stagnated it was the unemployment claims. Expected 255, previous 254, came over at 275. This whole thing with Yellen saying that the job industry is at its best it's been in years. I don't know about that. Durable goods came out as a beat, and final GDP came out as expected. So really, market really didn't do much. Gold took a little bit of a push higher, but the ES basically just traded in this balance around the 59.60 area. We've got core CPI coming out sometime today for Canada. Then we've got HPI month over month at 9 a.m., which is in 15 minutes. And then at 10 o'clock, another a fair amount of news. You've got core PCE price index. You got personal spending, you got CV leading index, then you got personal income. 10:30 we have natural gas, and Japan is in a bank holiday, so no trading there. So let's take a look at yesterday. We said that one of our main hypotheses, hypo 3 to be exact, was the possibility of getting stuck in these wicks right here. That we had gapped up and we had left some unauctioned territory. It was pretty blunt. It's still pretty blunt right now, and we said that there's a possibility we could just get stuck in the wicks. It's something I always look at, and you can see that for the most part, we traded. It was just brutal. We were talking, for I think it was 3 to 4 hours, we traded within a 2.5 point range. It was just, it was untradeable. It was a waste of day. I can't believe I spent most of my day just sitting here watching it. Of course, as the close was coming down, we finally broke, that week low, and we went down, and we were targeting that 58.75 area. We had measured move. It was really nice because if you look at the, these are wonderful when they work so well. We had just traded in this chop, and then finally we made this this measured move right here, and it's set up for a primary target of 60 and a secondary target of 58. Now we didn't do the 58 into the RTH close, but we did go down and hit the 58, and 58 was actually the low after the extended session. So both those, the primary and the secondary measured move, were hit, which was always nice to see those zipper measure moves, how well they seem to work. So basically, very rotational day with a little bit of a sell-off into the close. Globex, we've basically found balance again, and found balance in around this 58. You can see that I put a profile around the 3 days of balance, and I can go back to 4 days, and it's not going to, whoops, that shouldn't be there. I don't know why my profiles are messing up like this. Come on, get rid of that, delete that profile, and drag this one over. You can see that the 4 days prior to the gap up, our microcomposite VPOC was right here at 50, basically 59 and a quarter. And overnight, we're finding balance in around the 58. We're trading the 59. Well, actually, we just got a VPOC shift. So we just got a overnight VPOC shift to 59. So they are finding some balance here right now. Let's just take a quick, we had a high in the overnight so far at 61, put in just before the news. A nice little Mr. Sneaky there for a downward rotation towards that balance. Low is 55.50. Our value area, there's a CLVN at 55.75. Our microcomposite value area low is down here at 52.50. Let's just take a step back. I like to start my day taking a look at the macro and micro. I start with a monthly candlestick chart, 9 EMA, 20 SMA, and work my way down into the intraday. Beautiful upward trend, good slope, good separation. Challenge at the end of 15, 16, beginning of 16, took it back, put in the following 3 pattern, which is a continuation pattern. Now we got slope and separation, put in a new all-time high this month at 22.73. It is an unequalized high as well, and still looking for us to go up and take it out, but we got good slope and separation. The thing you got to keep in mind is that the Dow 20,000 is going to get taken out most likely before the end of the year, if not today or tomorrow. Whoops. So trend is still very much intact on the monthly. On the weekly, you can see that we've got this technical gap, so it wouldn't surprise me to get a pullback at some point in time. It's going to be interesting coming into the RTH session whether or not we rally from this 58 area, or if they go down into that 52.75 area where the microcomposite VPOC was when we first got up here. But we got good slope, good separation on the weekly, so the trend is intact on the weekly. A challenge to the trend doesn't even happen until we get down to the 22.10.50 area. Going to the daily, you can see that we're in consolidation mode again on the daily, and coming back, we've just tested the 9 from above. A break below the 54. I'm really looking at the 52.50 area will challenge the trend, and a move down to test the 20 will take us down into the 22.31.75 area. I doubt that's going to happen. If anything, I think they dip below and then they rally, or they rally from here. Going to the 4 hour, you can see that we've got a trend change on the 4 hour in the going into the Globex last night at the end of the RTH and the extended session. We've gone sideways in the Globex session. We've come up and tested the 9 from below and failed so far. If we do get above the 2061, the Globex high, there is a naked cross that we put in at 62, so I'd be targeting that and a test of the 20 from below on the 4 hour. But we are seeing possible start of a downward trend on the 4 hour. Same thing on the 1 hour. We've had a strong move down, and we found put in a Mr. Sneaky, closed that gap, and we're coming up and we're trying to get above the 20, but so far they're failing to hold above it. So again, that 58 area, 59 area is going to be pretty important. And we've lost slope and separation to the downside, so we could be trying to start the trend back up. On the 30-minute, you can see that we are. They've gotten above the 9 and the 20, and they're starting to get slope and separation to the upside. And again, 58, 59 area for the 9 EMA, and started an upward trend. On the 15-minute, same thing. We were, they were getting a pretty good start of a trend, then they came down, challenged it, took it back, put in a Mr. Sneaky, come down, closed the gap, failed to hold below the 20, now struggling to stay above the 9. And again, it's right at that 59 area. And then going to the 5, we're challenging and, going sideways and inside of MA squeeze, and trying to hold that 59. So that 58 is going to be an important level to hold for us this morning. If not, then I'd be looking for us to go down and test the overnight low at 55. So let's we took a look. Well, let's take a little bit better look at the bigger picture. We've gapped up, we've come up, we've created this balance. We got into that symmetrical triangle. We broke out of the symmetrical triangle, and then we're coming back and testing the apex of that symmetrical triangle and the 59.25. We got as low as 55.50, one tick below the CLVN. So the key here is there's a lot of undetermined fair value. So very blunt on the composite and the microcomposite. What we need to do is hold the value that we accepted before the breakout, and we need to hold that to get to continue back up towards the 2-day microcomposite VPOC, which is 64, and eventually come up. The microcomposite went from the 52 and 52, 75, 53, then it went up into the 66.50, then it went back down to the 58.75, I think it was, and then it went back up, but now it has possibility of coming back down. So watch the microcomposite VPOC. If it shifts back down today, we could be looking to go down and find some buyers for the final run up, and what I consider to be a break of the all-time high before the end of the year. There has been a couple situations in this point where we were challenging the all-time high coming into Christmas, and we did not take it out, and they waited till January and took it out in January. I had that as a note, and I forget what year it was, but it wasn't too long ago. Anyway, so key levels to watch is obviously the 58. If we don't hold the 58, look for them to come down and test that overnight low, and if that breaks, I'd be gunning for the 52, 75, 53 area, and coming down into this microcomposite HVN area down here. It's actually shifted slightly from the 52.75 to 53.75, so target the 54. If we can hold the 58, look for them to take out the gap, the naked close at 60.50 and the overnight high at 61, and above 61 I'd be pushing for the 64. Now there is a CLVN, and 63.75 is going to be important as well, because there is a LVN right around there from the prior day. So let's go to the overnight session. Our overnight high is 61. We do have time to put in a new overnight high, but it's looking less likely now. Our overnight low is 55.50. Our overnight VPOC, it could shift back down, but right now it's at 59. 3 ticks below the range low. Now you can see that we have this naked VPOC from, I forget what day it was, I think it was Monday, Monday, Tuesday, Wednesday. It was Monday. We had the VPOC, that real balanced day there at 59. That remains open until we test it in the RTH session. So I expect that to get taken out at some point in time on the open, especially if we open auction out of range. So it's going to be difficult to trade this area because of the balance that we've had overnight. So the real test really comes right here. And you can use the 62, but I'm going to be using the 62.50 to 63 area because of the fact that, I want to get above that LVN and above value. And then it gives me a good shot into the 64.50. And then above that, we've got the value area high at 66. This is a valid value area because of the range and the tightness that we stayed in there for the 2 days. And then of course I'll be now moving this down to 68 for a push to the target of 69.50. And at that point in time, I want to stay long into that 73 area. Our 20-period daily ATR continues to tighten up. It's at 17.19. So off of the low overnight, our upside ATR target is 22.7275, which basically, brings us right down into the all-time high at the 73. I just want to make sure that's right. 22.55, 50, 17.19, 22.7275. So that is valid. And then that is a valid overnight high. Sorry, overnight low, 55.50. Our daily downside ATR target is at 22.4375. So we do have some room for some expansion to the downside and move back towards this 41.75. I'm surprised they left that alone, so it wouldn't surprise me that they go down and get it. I just don't know if it's going to be today. So here we are challenging that 58 again. Below us, we've got the overnight high. I want to be watching this, the overnight low. I'm going to be using that as a trade level as well as a target. I have to because of the LVN there. Could move it down, but below there, I want to get short into 54, but more likely I want to see it come down even further to this 52. And that's going to take us outside of this value area on the micro composite. And then the next key level below us is the 49.25. The 47.50. And then, of course, this cluster down here between 43.75 and the 41, I mean. So those are all the levels. Let's talk about hypotheses. Typically, we're coming down to find buyers. I think a lot is going to, today is going to be determined on whether or not we get back inside of value or not. So, my main hypothesis is going to be an open auction either just outside a range or just inside a range. I'm looking for responsive buyers to push it up into the 61, 62 area, take out the overnight high, then fail at the 62.50, and then rotate down into the overnight low, chop around here, and push down into the 53 area, 53, 52 area, and close somewhere down here. I'm not expecting a lot of range today again. The range has really been tightening up. So, values coming down, so we have to assume that they're going to continue this price discovery until they find buyers with conviction. The opposite of that, my hypo 2, is an open auction in range, or sorry, just out of range or just in range, a push down to the 52, 53 area, maybe even hold the overnight low, and then find buyers and rotate us up back up into the 64, chop around in value, and try to get a late day probe back up into the 66.50. Not expecting more than that. So that's hypo 2. Hypo 3 is another balance day and a push inside of range and then chop between 58.75 and the 64 area, and just fill in this this LVN area between the upper and lower distribution of the day, and just continue to mature the auction in this area, to determine fair value in an area that is very blunt. So hypo 3 is open auction, just out of range or just in range, and then just take out the 58, find buyers somewhere down here, come up, and then just chop, inside of this this range between 64 and 58. Hypo 4 is a failure to get inside of range or inside of value and get serious selling, okay, and push us all the way down to the 52, 53 area, and then fail and push through down into the 41 area. So I think we'd see failure in terms of a trend day to the downside rather than the upside. But hypo 5, which is the alternative, is going to be a open drive into value, chop in value, and then take off and go and put a new all-time high. So those are all the possibilities. Look for the clues. It's difficult trading right now because the volume is very light. And the algos are kicking in, and you can get stuck in these tight ranges where it just goes sideways forever. Currently, right now, the Keltner is slightly slanted to the downside. We're trying to hold above the center line, but failing. We're right on top of the 24-hour VWAP as well, and if we can't hold that, a move down to the lower Keltner will take us down into that 53, 52 area as a test. If we can get above, a move up into the upper Keltner takes us up into the 64. So you can see how the Keltner, coincides with the levels itself. Something that you guys should pay attention to, and why I use the Keltner the way I do. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.